So I've recently bought 4 stocks that most investors had thrown in the trash. Yes, I know. Every investor and every YouTuber, they just want to talk about the stocks that are soaring, like Palantir, SoFi, and Tesla. But the well-known truth about stock investing is you want to buy low and sell high. And I think I found 4 names that are poised for a turnaround. In fact, all 4 companies have new CEOs. So the problems of the past might turn into big opportunities in the near future. So let's get into it. This first stock, many of you are going to just say, no way, I'm not investing in that. In fact, I'm in Las Vegas right now and I was boarding my plane, and I'm not going to lie, I was a little bit nervous. That's because I was boarding a 737 plane made by Boeing. Yeah, so it's no laughing matter. The fact that Boeing has struggled over the past several years. After years of mismanagement, stupid DEI policies, and some downright tragic events, Boeing is actually set to take off again. And yes, Boeing has a lot of work to do, but the new CEO, Kelly Ortberg, appears like he's up for the job. Shortly after taking over, Ortberg says he's looking at doing less and doing better. Wanting to focus resources on their commercial aircraft and their defense division, he expects to decide which units are to be divested by the year end. Divesting simply means selling business units that aren't related to defense and commercial aircraft to other companies, which could help Boeing's struggling balance sheet. More on that in a minute. Boeing's new CEO also has a vote of confidence from none other than Elon Musk, who said this just last month. Boeing is on a much better track with the new CEO. The prior guy had no idea how airplanes or rockets worked, just zero. But just let me be clear. A new CEO is not going to just magically solve all of Boeing's problems, but it's a step in the right direction. Now, the company has a lot of work to do to regain the trust of the consumer and, probably more importantly, regulators here in the United States. Boeing's 737 MAX aircraft has been grounded for several tragic accidents. This has killed the company's financials and, more importantly, its cash flow. In November of 2024, the company delivered only 13 commercial aircraft, including just 9 of its 737 MAX models. One silver lining is that once the 737 MAX aircraft is cleared for takeoff, Boeing already has a large number of these jets that were built but not delivered due to regulatory grounding and production halts. This means that once the aircraft is deemed safe, many of Boeing's financial problems will be solved. Obviously, investing in Boeing comes at a risk, but that is what's creating the opportunity to buy the stock just above its 52-week lows. And I'm with Elon Musk, believing the right CEO is in place and it's only a matter of time before Boeing takes off. The next stock has seen its shares decline 3 years in a row. That's the first time in this company's history that that's ever happened. But that's all about to change over at the next stock I've been buying, and that is Starbucks. So in order to pull this off, Starbucks needs elite level leadership. And on paper, incoming CEO Brian Niccol is ideal for the turnaround. He previously led Pizza Hut and Taco Bell to successful turnaround and rebranding campaigns. More recently at Chipotle, sales skyrocketed under Niccol, and the company innovated on ways to handle mobile orders and increase throughput through the stores. Niccol's early plan for Starbucks is a back to Starbucks mantra of returning the company back to what helped propel it to a market leader that has become. I think this is a great strategy. So this includes bringing back some features that used to be familiar at Starbucks locations in the past, including ceramic mugs, a coffee condiment bar, the Sharpies writing on the cups, and more comfortable seating. One aspect of Starbucks that needs a makeover is mobile ordering. It has become like an extremely popular thing at Starbucks, but it can be confusing picking up an order when every drink kind of comes out at the same location. Niccol's plan is to implement a clear area where mobile order drinks are delivered and picked up separate from the in-store. Another focal point of Niccol's turnaround plan is to make and deliver orders in 4 minutes or less. During his time at Chipotle, the company was hyper-focused on speed and throughput, and that experience should really serve Starbucks quite well. Part of the process will include eliminating some customization, which the company believes makes the drinks overly complicated and hard to make and hard to order for customers. Also, adding the separate bar in the waiting area where customers can add cream and sugar to their own coffee will effectively take that away from the employees. Another area of concern for Starbucks is higher competition and weaker sales in China. In December, the company hired a new growth officer for the region, and there are rumors Starbucks might be willing to sell a stake in its Chinese business. Good news for consumers is Starbucks is planning no price hikes during 2025 as they've seen inflation start to moderate. But it means Starbucks has a lot of work to do. In Q4, revenue declined 3.2% over the past year, and this missed expectations by about $70 million. In terms of a turnaround timeline, here's what you should expect as an investor. Expect Starbucks to burn through some of its cash revamping stores. This is going to happen kind of in the first half of 2025, and its likely results won't be seen until the back half of this year, really at the earliest. So if you buy shares of Starbucks, expect several quarters to be maybe a little rocky, but that's exactly why I'm accumulating shares during this turnaround. The new CEO has a proven track record, and returning Starbucks to its former glory is the perfect strategy for the company and its shareholders. Okay, so if you thought the problems over at Starbucks and Boeing were bad, wait until you hear about this next stock that I've been buying. In fact, longtime subscribers of mine probably won't even believe what I'm about to tell you, and that is I recently bought shares of Intel. That's right. When investors were buying up shares of Intel over the past several years for as high as $50, $40 per share, I was well known for making videos telling them how stupid they were. Well, as it turns out, it was pretty stupid. But every investment has its price. And for Intel, I think that day has come. Currently, the company is valued at just around $90 billion. And look, that's for good reason. The company has suffered through years of mismanagement and it seemingly missed every major semiconductor trend over the past decade, including mobile phones and AI, just to name a few. But that doesn't mean that the company is left for dead. Intel CPUs are still often the leading choice for not only data centers, but personal computers as well. The company also has some assets that it can sell, including its remaining stake in Mobileye and Altera. A more focused Intel could be dangerous, but there's still a lot of work to do. As you probably know, the company is also trying to build out a foundry or a chip manufacturing business alongside its chip design business. This is an antiquated business model within the semiconductor industry that smart companies like NVIDIA and AMD, they abandoned this a long time ago. It's simply too difficult to design and manufacture chips, and in order for Intel to be great again, it has to pick one. Getting into Intel shares now comes at quite a bit of risk. That's because, unlike the rest of these companies, they haven't found their game-changing leader to take charge quite yet. But I believe the Intel CEO job is one that could really attract some top talent within the semiconductor industry. And once that announcement is made, it's likely shares of Intel will move much, much higher. Now you notice with this last stock, I actually had to do a wardrobe change. That is because this is one of the largest clothing and footwear brands in the world. And it's set up perfectly for a turnaround. Of course, I'm talking about Nike. Now, like the rest of these companies, Nike has just hired a brand new CEO. And look, it couldn't have come at a better time. The previous CEO at Nike was an idiot, and he made several blunders, including pulling brands out of retailers like Macy's and Foot Locker, only to allow upstart brands like Hoka and On, among others, to start to gain market share. He also pumped out popular and hot-selling shoes like the Dunk Pandas, which were great for Nike's revenues and earnings, but it was terrible for the brands. Once hot-selling sneakers now really don't draw much attention when they are dropped. Enter Elliott Hill, Nike's new CEO. He started at Nike as an intern, and he's gotten the top job at the company. That's got employees of Nike fired up. In the past, he's held key roles at merchandising at retailers that Nike has really taken for granted. And he's worked at brands like Jordan. On the company's latest earnings call, Hill outlined a strategy that is exactly what needs to be done over at Nike. The company is going to pull back on supply of its hottest selling shoes, making them desirable again, especially at full price. Look, and temporarily, this is going to reduce Nike's sales, which short-term investors are not going to love at all. That's one of the reasons why the stock is down. The company is also going to stop running so many sales and discounts on Nike.com. Instead, the company will funnel the poor selling and slow selling inventory into its outlet stores, which is more profitable because you're not paying for shipping. I love the new CEO, and he's making these hard choices, and it proves that he has the backing of the board of directors, and probably more importantly, founder Phil Knight are 100% behind him. Look, Nike sales are going to decline in the short run. Growth is going to look bad on paper, but the brand is the asset over at Nike, and Elliott's strategy of returning it to a full price brand with elite level marketing is exactly what needs to be done. So that wraps it up for today's video. Now, keep in mind, I've discussed all these stocks on my newsletter, and I'll keep sharing those ideas when they become available. Links to the newsletter and the social media feeds are down below. Hopefully you guys enjoyed today's video. Let me know down in the comments below what stocks you're buying. We'll see you next time.